morning, everyone. It is Saturday morning, and we are back with another episode of Xenith Trading Analysis and Recaps. The purpose of this video today is actually to recap the entire past week or so, and I'm going to show you guys how we executed and planned out the entire range and all the trades that we took within the range over the past week. A lot of this is very simple and straightforward. I'm going to break everything down for you, and I'm going to go by session and post some of the screenshots of the trades and the plans that I provided within this video so you guys can take a look in terms of referring back to timestamps. It's been a great week for us, an extremely lucrative one. Although the market hasn't really done much in terms of a macro range, this is where the opportunities arise for lucrative trades on options, on intraday and even swings. So I'll be with you in just a second. All right, now let's actually start off with SPX. Coming into this week, I had a relatively bearish bias due to one single structure that we focused on from last week, which is the daily inside candle. So I'm going to delete some of these levels on this chart for now, just so you guys can focus on what I'm referring to, and I'll put them back later. Now, the daily inside candle. You guys know that I've done a video on the monthly inside candle structure way back in, I believe, 2023 or 2022, in which it allowed us to find bottoms on many different names after the conclusion of the bear market in 22. So some of these include Roblox, Snow, Hood, DraftKings. I think there are a couple more, I forget. And I'll show you guys examples of what I'm referring to. I've done shorts and a full video on that on my YouTube, so you guys can check it out. Now, this video today is actually going to be very similar to the video that I did in October, when we nailed the entire range and downside during that week on NQ. The fundamental aspect of how we traded this range is a mirror image of how we traded NQ, utilizing specific key pivots that we needed to see continue rejecting for us to continue with this bearish analysis. Now, one thing I want you guys to understand is that when we are looking at analyzing the markets, it's so important to have a macro analysis that you stand by. What you do intraday is going to be different from what you have in mind for a macro analysis, because that will be dependent on what the market is providing for that day. So for example, if I'm macro bullish, that doesn't mean every single day that I come into the session, I'm going to long NQ and take calls on SPX all day long. No, that's not the case. I will trade whatever the market is providing during that session. So same goes for this past week or so. I've been macro bearish as long as we've been within this range. That doesn't mean that I'm also looking to short every single minute of the day. No, even if we are seeing a pop on the day, for example, CPI day, which I'll get into, that doesn't mean I'm going to just keep trying to short the entire rally. You wait for your moments, then you execute an attack. So going back to this, the same way that October video that I did started with a single analysis, I also believe it started on a Wednesday or Thursday prior to the entire week. We spotted this daily inside candle print from last Wednesday. As soon as you get this gap up and a very beautiful, almost a full body type of structure, it's very easy to identify this as a potential daily inside candle. Well, why? Because number one, we already have a gap that we can potentially fill. And in order to see that gap fill, your trigger would be the break of this low of this candle. Now to see higher, your trigger would be the break of this candle as well, break and hold of this upside range. So this is how you can come up with a daily inside candle. And again, inside candles you can find on any time frame. It doesn't necessarily have to be a higher time frame. If you guys refer back to my inside candle video, you'll know I have a short up where I use the inside candle of a 30-minute and 1-hour chart on SPX, in which we used to day trade calls on the break, like 18, 20 points or whatever it was. The only difference in utilizing inside candles is the trajectory of the move once they break. So for example, if you find an inside candle in a lower time frame, such as a 30-minute chart or a 1-hour chart, once that inside candle breaks, you're probably expecting that move to pan out within the next couple of hours or so. If you're finding an inside candle on a monthly chart, then you're expecting that move to be on a much larger time frame, right? And again, these things go back to the very simple fundamental concepts in price action about contraction and expansion. The longer something contracts, the larger the expansion will be. When you have something that's been bull flagging for 3 hours, you're expecting that breakout to occur and play out for a couple of hours, maybe a day or two. But that doesn't mean that the bull flag breakout will last an entire month. Now, if you take a look at a bull flag breakout that's been panning out for 2 years, and I think Square is a great example of this, which I'll show you guys here. Square is a great example of this because this is a bull flag breakout that I played during COVID. So if you take a look at Square, this is a 2-year bull flag that formed. So when you're trading a breakout like this from a 2-year contraction perspective, you're not expecting your target profit to just be all-time high here or a break of all-time high. You can expect a lot more due to the amount of time that is spent within this range. So the same thing goes for any structural patterns. The higher the time frame, the larger the move that you can expect, the larger the outcome. I don't want to go too off tangent in terms of teaching technical analysis rather than recapping the week, but these are key components that you guys should be focusing on. Now, going back to the daily insight candle. This all started with this single daily print. Last Thursday, we never got a close above it. They tried, rejected it. Again on Friday, they tried, rejected it. And funny enough, Friday we actually closed above it on SPX. However, if you take a look at SPY, we never got a close above it. So being that this daily insight candle is now providing me my range, and if you guys look at the weekly plan that I provided for SPX, this was your weekly upside and downside pivot. The top of the DIC was your weekly upside pivot. The bottom of the DIC was your weekly downside pivot. And what do we do ever since? We've pretty much been ranging, but with a bearish outlook. Now, this is from a TA perspective, correct? And I'll dive into NQ a little bit more, but I do want to focus on SPX and these components first because this is primarily what we focus on. So you have your initial analysis from a very basic, straightforward TA perspective. Earlier in the month, on December 1st, I had told you guys that I have this weird feeling that something's going to break. The market has been ripping to new all-time highs. And look, I'm not a doomsday caller, but something's going to break. Okay, which already started to help me build that bearish bias. Now, going back to what I mentioned in regards to having a macro analysis, you have this overarching theme of what your analysis and bias would be, correct? But that doesn't mean that every single day you trade intraday, you keep that same bias. You're just going to trade whatever the market is providing and react to that. But with every session, from the beginning of having that macro analysis, every session that you observe and trade will help you build that confluence and conviction towards that analysis until it's invalidated. Now, in this case, it all started with one simple structure, a daily insight candle. So what is my invalidation going to be for me to flip bullish? Well, a daily close above this, which we never got for an entire week. So if we don't get a close above this daily insight candle range, how can I be bullish? I'm going to continue executing as I have been throughout the intraday and find areas to short, right? Because this is already set in stone. The analysis is bearish, regardless of how you look at it. The analysis is bearish. Now, what you do with that, you zoom into the intraday, you find your levels, and then you execute that macro analysis from an intraday time frame based on the levels that you have. It all started with that initial entire thesis paper that I wrote about how I have this feeling something's going to break and market is starting to top out a bit. And we also discussed different components throughout the week, such as looking at market tide from Unusual Whales and how this year is very different because when you're looking at market tide most of the time, it's extremely skewed to a handful of names. It's the Mag 7 that's holding us up most of the time. Most of the year, it was NVIDIA. So even when you look at market tide and net premiums are green and biased towards calls, a lot of that was skewed because of NVIDIA. So there are times where you would see market tide looking extremely bullish in terms of sentiment, but SPX just gave the opposite sentiment on its price action. Okay, so within the past week, you saw the exact same thing. Google was the one that was pushing Qs to new all-time highs. And then it was AVGO and also Tesla this week. Okay. We are being held up by a handful of names. And throughout this entire time, while tech is seeing new highs and SPX was seeing bounces on CPI and so forth, the stocks under the hood on SPX were continuously pulling back throughout the week. And these are things that you have to pay attention to. Now, diving deeper into this SPX daily insight candle, we saw a couple of daily closes below this DIC range, right? So we saw this close on Monday. And Monday morning, I had told you guys that I'm likely going to buy swings on puts. And it was 3 different strikes for 3 different dates. It was 60-50, 60-70, and 6,000 puts for Tuesday, and then Friday, and then next Friday. We got in those Monday morning. We immediately capitalized on that the entire session. We saw 100% on both the 60-50 and 60-70, which we trimmed or took profit. The 6,000 puts, we saw about 70-80%, and it was the only trade that I didn't manage because it was already covered by the other two. And I wanted to see the entire move play out. And one key component that I discussed that morning was the fact that puts are so severely undervalued. Volatility is extremely suppressed. And when you take a look at that from an options mechanics perspective, there is no reason why I need to play calls. Absolutely not. Because the puts will provide you much higher RR and it will be way more lucrative than buying calls would be. Even if the market is riding higher all day long like it did on CPI, your RR on puts will pay much more simply due to the mechanics and current market conditions. IV coming into the week, and I told you guys this, IV coming into the week was trading around 10 to 12%. Normally, we would be trading around 17 to 23% depending on the conditions. Okay. We took about, I think, 4 or 5 puts, all for over 100% over the past week. And then we just recently took 60-50 puts yesterday for 465%. The calls are not providing that type of move, even on CPI day. They're not. Which is why it only adds confluence to the macro bearish outlook that I had starting from last week. Right? The puts are so undervalued. And if you have been trading SPX long enough and you understand how the option mechanics works with the Greeks and IV and all of that, you will understand how many multi-baggers you can capitalize on with SPX from such a minimal move. So the first time when we took SPX, we caught 100% off a 10-point move. In regular volatility conditions, you would need about 20, 30 points to see 100% on your returns for options. Which is why I was so honed in on focusing on taking puts throughout the intraday. And why I was so focused on taking swings on it, because they're so cheap. Normally, I don't like swinging SPX because the RR typically isn't worth it, especially when we're in a higher IV overnight, if you're not getting the move that you're looking for. And even if you're taking a swing for, let's say, a week or two out, to find something that's within risk in terms of the premium size, you would have to go pretty far out of the money. All right. So that's the main reason why I don't really swing SPX. But in these conditions, I am more than willing to dabble in them because of how cheap they are and how undervalued they are. And that only provides more conviction and confluence to my initial analysis of being bearish anyway. Okay. So now you're kind of seeing how everything comes together. Now we got a couple of closes below the DIC range. And of course, CPI pops it. Now, one other thing that I discussed this day is that I felt it was very suspicious that we popped this hard on CPI. And I'm going to start using NQ in a second to show you guys. But what's interesting about this is that we actually opened, gapped up right below the daily inside candle range. And then guess what? The entire range of the day was the daily inside candle. The highs were right above it, which I'll show you. I have a 6092 level. Okay, here we are. Okay. So the 6092 range, 50 level is a level that I provided you guys previously. And this is the exact same level that we rejected on CPI day. Now, with that being said, on CPI day, I had mentioned to you guys, once we were up here, that I'm looking at 6085 puts. And if I take this, I'm slamming 100 contracts on it. I ended up not taking 100 contracts because I waited too long for the entry. And I got in, I believe, like 20 or 30% higher than the initial entry I was looking at. So I took 50 contracts instead and took it down. How did I come up with this analysis? Well, number one, going back to looking at this from a macro perspective, we are trading right at the daily inside candle. I know I have a 60.9250 level here. You zoom down into the 5-minute and 3-minute charts. You have a double top right at a key D King level. Double top. You go into a 30-minute chart. Where is it? You go into a 30-minute chart. This is a tweezer top. Tweezer top means equal highs. Tweezer bottom means equal lows. Okay? Tweezers are one of my favorite candle structures to play for reversals because they are very powerful. People can see them as a double top, you know, if you zoom into lower time frames, but tweezers are extremely powerful. Don't underestimate them. And look at the move that it provided into the close. Well, within that first hour or so. Okay? So again, going back to the whole idea of macro versus, you know, micro intraday, I'm still macro bearish, right? As long as we're still rejecting the daily inside candle, I can't be bullish. This is essentially the level that they try to sweep above this. I saw intraday, zooming in, that this is bearish. I executed on those puts. And then by the close, now you see we trade back below it. We get a bearish retest here, okay? We broke back below the top of the DIC range, 60.89.84. We get a bearish retest. This is around 230 already. We dump a little bit more. We retest it again, and then we dump right into the close. 2 bearish retests within 2 hours of close. So what does this mean then? This is now setting you up for continuation the next day, which is exactly what we got. Okay? So you can start seeing how this whole thing builds out. And then now going into Thursday session, you have a bear flag forming intraday, and then you break down further. We gap up again on Friday, we break down further. Okay? The other thing I want you guys to know in regards to what I mentioned after the close on Wednesday is the fact that Wednesday on CPI day, remember, this is a key factor. On CPI day, we traded the second lowest volume day of the entire year on SPY. The lowest volume traded was on December 3rd, which was actually here, this day. Okay? This was the second lowest volume day traded throughout the entire year. For SPX and SPY to provide the same type of move in terms of range and percentage as it did here the day prior, meanwhile, it's the second lowest volume traded of the year, that's suspicious. And again, from a VPA perspective, volume price analysis, it's an anomaly. Okay? We are trading the second lowest volume day of the year, and yet this is one of the most bullish candles within this range. Something doesn't add up. All right. Now I'm going to take a quick look at it with NQ for you guys in terms of what I spotted that day as well. So I'm going to switch over to, I believe it was the hourly. I'm going to take off the ETH. Okay. 65, yeah. So you guys know my high win rate, high risk reward structure called the rubber ducky. This is exactly what happened on CPI day. Okay. If I invert the chart, you'll see it better. These are the types of structures which I coined the rubber ducky that I look for high reversals. And it's exactly what we got. How does a rubber ducky happen? You start seeing the compression of the candles on the way up or way down. Okay? Now, typically, we use this a lot when we're trading the premiums on options, right? This is how we have such high RR wins with those. Normally, you would see the increase in volume while the bodies of the candles and the candles themselves are getting more compressed. So this is what I noticed on NQ already heading into the close, which also provided me more conviction on the entire macro bearish analysis for the week. All right. Now, again, I always emphasize this to you guys. The most important part of trading is finding confluence and conviction to build that trade. The more confluent data points that you have, the higher the conviction the trade will be, the more well executed it will be, and the higher the RR will be. All right. That's exactly what we've been doing with this. And if you refer back to my recap video from October, it's the exact same thing we did with NQ. We kept seeing pops during the day into close, into that 528 level, but then overnight they would sell the entire thing off every single time. And that's more important than what I saw during RTH. Okay. So it's very similar to what we did with SPX this week. Now, again, we kept just taking puts. And on Friday, I'm going to dive into Friday's plan a little bit when we were on stream because it was a very clear-cut plan. Now, throughout this entire range, we obviously use gamma levels as Confluence as well, and there's a huge gamma wall on a macro level around the 6090 area, okay, and 6060. Funny enough, those gamma levels happen to just line up with the daily insight candle. So again, the market makers and dealers are looking at the exact same thing, okay? And as long as we never close above this, it also lined up with the gamma, all right? So with Friday, I had mentioned to you guys that, look, we have a gamma wall right around 60.75. We may pin it there, but I expect it to act as resistance. And we have levels of 60.74, 60.78. And I drew out the squiggly for you guys. I expect a test here and then probably a rejection down. We break 60.61 again, we're going to see 60.44 and 60.35. This was all given to you before the market opened. Okay? And throughout the day, we took our, oh, sorry, I forgot a 60.69 level. We have a 60.69 level that we use as a mid-range pivot as well. So each level will represent targets, entries, and validation points and pivots, okay? The moment we break back below 60.69, we're going to see 60.61 again, which is the bottom of the daily insight candle. We break that, we're going to see these two levels down here. Now, 60.44, 60.35 were previous levels that we use within a range, which also happen to match up with gamma. And again, the levels that I draw here, they're not drawn here from looking at GEX, okay? But it just so happens that the gamma levels literally line up with my levels, which is even better because now they provide some stronger confluence when we react at those levels. Looked at SPX, saw that we were trading at 60.69. We entered the 60.50 puts here at $2. We trimmed it at 50% and then 100% all the way down into 60.61. Why? Because we are now hitting our key levels, so I'm going to take trims. Once we broke those, I just kept holding. And we saw 465% by the end of it, right down into 60.44 or somewhere below it. I was initially targeting 15 on the contract, which would be 650%, which is a level I also found looking at the premium chart. It ended up not happening until we actually finally got down here. So we were out by 11.3 was our exit from 2. And we saw 15 hit on this retest of this 60.35 area. If you pay attention to everything that I discussed, you can see how I come up with different angles to kind of back the analysis. First, it started with something so simple as the daily insight candle. Okay? This is already helping me define my range, define my pivots, and define my directional bias. Okay? Number 2, from an options mechanics perspective. Puts are so undervalued and volatility is so suppressed that if you are able to catch even a small intraday move of 10 points on SPX, you will immediately see 100% plus on your puts. You are not going to get the same thing on calls, okay? And they're already priced out. With puts, they are severely undervalued. These market conditions don't happen very often. When we're starting to turn bearish and we're in a bear market, the volatility is so high and the IV is so high that you would need a much larger move on your puts on underlying in order to have a much larger ROI on your puts, which is why I told you guys from the get-go, take advantage of this. This is the time to really capitalize on SPX. You have to understand it from that options mechanics perspective. So that's Confluent data point number 2. Okay. Then we kind of trickle it down and dissect it on a session by session basis. Well, we kept rejecting the top of the DIC. I can't be bullish. There's no way I can be bullish. I don't care to play calls during the day. I really don't. This entire week, I think I only took one call on SPX the entire week and a half, and it was a loss. I don't really care to take calls because I know I'm guaranteed to make more money on my puts, which is exactly what I showed you guys this week. And then from here, I kept emphasizing the fact that, hey, we need to get a close below the DIC, which we kept doing, and then we gapped up, and then, we kept pulling back and things like that. But everything was very straightforward, okay? And throughout the entire session on Friday, I had kept you guys updated with the gamma perspective. So from the opening, we were trading at about plus 14 billion on gamma, which is bullish and extremely positive, okay? But that 60.75 pin and that wall is something I told you to watch out for. So we rejected that area there. We broke back down into 60.69. By the time we got into these puts, the gamma had already decreased by 10 billion into 4 billion. Once we got into those puts and we got down into the 60.61 area, which was, I think, right around the zero gamma territory for intraday, the gamma flipped negative. And once we continue to trickle down here, I saw gamma decrease to minus 11 billion, which is pretty bearish and helps to find Confluence in a sustained momentous downside move. Once we got down into the 60-50, 60-44 area, gamma had flipped and doubled into negative 23 billion. Normally, when you see that happen on a gamma perspective into the 20 billion plus, it's extremely sustained and extremely strong. And you can just continue shorting every single bounce. Okay. And I provided you guys from the morning, I said if we break the 60-44 level, there is a gamma magnet at 60-30, 60-35, which is exactly what we got once we broke that. Okay. This entire day on Friday was planned out before the market even opened by utilizing my levels and then finding Confluence with gamma as well using Gex. Okay. So again, it all starts off with this macro analysis. As long as we keep rejecting the DIC on the upside, I'm bearish. Okay, we come into the day, we gap up. Well, what are the most obvious levels that I'm going to short? 60-74, 60-78. Okay, let me take a look at gamma. Oh, wow, there's a 60-75 wall that lines up perfectly with it. Okay, even more Confluence, right? We missed that, of course, but we got in around 60-69 because I know once 60-69 breaks, this whole thing is going to play out. Okay, they're not going to hold the DIC once again. It's not going to happen. It's been retested too many times for them to hold it one last time. All right. And this is how we nailed the 60-50 puts for 465% on Friday. Okay. Now, adding a little more Confluence in terms of NQ. We saw NQ see new all-time highs the entire week. Every time, every session was basically a new all-time high. But what you have to realize is that the S&P has never tested a new all-time high. There's a major divergence. And when you see a divergence like that, it's something you need to pay attention to. Okay? Because like I mentioned earlier, we already know that the market is being held up by just a handful of names, mainly the Mag 7. Okay? And we even tried to day trade Microsoft to see if it was a laggard on Friday. It still rejected a key level. Microsoft is the only one that hasn't seen new all-time highs yet. All right? So looking at NQ, you can see my weekly downside pivot here at 568 and weekly upside pivot at 679. This was coming into this week. All right, so where's Monday? Monday is here. Actually, I'm going to turn on the extended hours. We rejected the weekly upside pivot during pre-market. So what does that mean? It's bearish. Okay. When I provide you guys weekly and daily upside pivots and downside pivots, they will act as your initial resistance and support. So I typically like to short the upside pivot and long the downside pivot until they break. The initial tests, especially when you're looking at it from an intraday perspective, the initial test will usually provide a reaction off of it before they actually break it. So on Monday, we started off with already rejecting the weekly upside pivot. Okay, this already kind of sets the tone for the week. We're bearish all week long. We broke the weekly downside pivot the same morning. And from there, it was another 150 points or so. All right, the next day on Tuesday, we continue lower, made a new low. You get your backbreaker 2B here. Right? This is a little bit of a 2B, correct? Okay. Little sweep here, and obviously it closed higher, right? And after hours and overnight. And now you get that pop on CPI. Okay? And again, going back to what I was discussing on CPI, this is your little rubber ducky structure that we saw. Okay, we broke above the weekly upside pivot. We even retested it right after the morning open, right here, and then we sent it higher. So looking at the chart from this perspective, you can understand how to utilize my pivots and why I choose them. Okay. And then we saw higher continuation. And then this is where the whole analysis of the CPI day comes into play. And we started to pull back again. Right? The levels that I have on here, I don't have all my levels on here for a purpose, just to show you guys the main levels that we focused on throughout the week. And I told you guys 766 is going to be pretty key. This is a key level that we use actually the first time we ever tested this level way back. And it's continued to be a pretty strong level. The next day coming in, this was our daily upside pivot. And I had shorted Thursday pre-market and into the open. This was for PPI. I shorted PPI twice in pre-market. Okay. And then we get into Thursday. It was relatively choppy. Even though it was choppy, I'm going to zoom down into 5-minute charts. we were streaming on this day, and I told you guys it was extremely choppy when we first opened up. And I kept telling you guys, just set shorts around this area and just keep scalping it. Just keep scalping it the entire time. That's all you got to do. Okay? And it kept working, right? Until we saw our lower levels, then we bounce. Okay? And again, this is another 2B backbreaker. You get the break of the low, you get the sweep, you get the reclaim. This is bullish, guys. Okay? So going into that whole thing that happened in chat, looking at SPX, this is bullish. This is the same result. Except this is a much stronger structure than whatever was mentioned. Okay? It's the same thing that I just showed you guys over here. Liquidity sweeps, stop hunt, liquidity hunt, whatever you want to call it, peekaboos is the same thing. The same result. And you typically get a divergence on RSI that helps with this move as well. And then 719.25 break, I told you guys you can long into 737 or sweep the high. And it worked out perfectly. I took these longs down here as well. And we ended up breaking down. And I believe we took SPX puts Thursday afternoon as well. Yeah, I believe we did. I'll put the screenshot here. So this was it. Okay. Now, going into Friday. This is now Friday. We gapped up again. Friday was the AVGO ER. The whole thing held it up. And I caught the Pico top on NQ. I shorted 902.50. And I moved my stop too early, which then I got stopped out in profit and saw the high swept, which I initially thought was going to happen. And then we pulled back. And then I started giving you guys shorts all around this range here. And part of the pre-market plan was that, hey, I expect us to retest the weekly upside pivot of 679.50. The same way I provided you guys the plan on SPX, I even drew out my squigglies. I told you guys, I expect a retest of 679.50. And when we get a V-shape potential later in the day, I expect 820 to be retested. This was all planned out before the open. So we continue shorting. We caught, I think, 30, 40 points at a time down here. This is also when we were in those SPX puts. We got the initial reaction at 679.50. Continued to hold it the entire time. Okay. Now, take a note. I mean, this is the weekly upside pivot that I provide you guys, right? Look at the reactions that we're getting off this green level. And then, towards the end of the day, what was the high? 820, right at this red level. Okay? The entire playbook panned out exactly as I expected. Not only that, this 76675 level, again, was pivotal for intraday because I had mentioned to you when we were trading up here, if they give up 76675, the entire overnight gains will be vaporized. All this will be gone. So once we got this 766 break right here on this green line, we vaporized the entire thing and saw a new low from this. We didn't get the full gap fill, and you guys had asked me if I would expect a full gap fill, and I told you I probably wouldn't. What I would like to see is a retest of the weekly upside pivot. I probably wouldn't expect more than that. Again, this goes back to the entire analysis of how I broke down this range, and it all started with one simple structure: the daily inside candle. Okay? That's it. And not only that, from that very time that I mentioned the gut feeling of everything breaking down and something's going to break, not long after that, a few days later, I said this is euphoric. Okay? So I'm going to mark this time step so you guys can see it. This was on the 5th. Yep. And what have we done since I dropped the E word? We have been pulling back the entire time. You guys know this, especially those who have been trading with me for a while. I rarely ever say the market is euphoric. But when I do, the market always tends to pull back. And that one word that I dropped tends to mark the top on the market. Whether it be short term or long term, it doesn't matter. Okay? And I'm going to show you exactly what I mean by that. Where is that screenshot? Here you go. And here you go. These are the last two times that I said the market was euphoric. July 19th of last year, which ended up marking the high. We swept the high from the time I said that. And then we saw a 10% move down on the market. And the other time was in March of 2022, literally on the tip top of March 29th, where I said there's lots of euphoria. Make sure you're managing blah, blah, blah. And from then we saw a 25% markdown on the S&P. This is now the third time I'm saying this. And I told you guys, it feels euphoric. I may not be fully there on that stance yet, but I definitely think I'm starting to. And from then, everything else was kind of just building onto this, right? Going into next week, I'm curious to see if they continue rejecting the DIC. Of course, like I said in the weekly plan, this is now going to be your pivot. As long as I stay below this, I'm looking for sub 6,000. Okay. But 60.35 is going to be your pivot now. This is an extremely strong level. So I need to see this break, and we're going to see sub 6,000 pretty quickly, in my opinion. That's all for today. I hope I covered everything. Let me just look back at my notes, see. NQ levels, DIC, gamma, yep, vol, puts undervalued, put swings, oh, RSP. So this is what I'm referring to in regards to the stocks under the hood. Look, we've been pulling back on these names since the beginning of December. It hasn't stopped. Okay. Meanwhile, SPX was still ranging and trying to test new all-time highs. And NQ was seeing new all-time highs. QQQs were seeing new all-time highs. We've been pulling back on RSP the entire time. The entire month. Okay. I covered everything I wanted to cover. I know a couple of people wanted me to look at some things. AMD, I'm not too big of a fan of AMD, honestly, and you guys know I'm pretty bearish on NVIDIA, and we've been capitalizing on NVIDIA pretty well. I don't like AMD for a dip buy yet. If I even draw this trend line here, we've pretty much already broken trend. So I'd like to see a retest probably around this area for any potential dip buys, at least break this low. I would rather see them sweep this low into this trend line down here and for a dip buy. Short term, there may be a bottom depending on this week. We are nearing Christmas and holidays now, and this week is FOMC. It's going to be extremely pivotal. I'm going to be real with you guys. I don't think Santa's coming this year. I think the Grinch is coming. I'm going to be honest. You know, this entire year, seasonality hasn't been following as it should be. The entire year. Doesn't matter what you look at. Literally every single textbook seasonality month has not been following that way. If you take a look at some of these things, so for example, you know, there's like the sell in May and go away. We didn't really sell in May, right? From the open of May, we popped to new highs and we pulled back a bit, but I wouldn't even call that sell in May and go away. Even in September, September is the most bearish month of the year. Yeah, we dropped in September, but then we reclaimed the entire thing and closed at new highs for the month. This is a different year due to elections and things like that, but as I discussed in that entire thesis paper that I wrote out, is the fact that had we not rallied and staircased up the entire time from the August lows down here, I would have a very different view. I would say, look, just long everything into in a year and just print and walk away. But the fact that we've been doing that this entire time since the August reset, I have to be careful. We are getting closer and closer to what I have as my max targets on SPX, which is right around 6,100, 6,200. I don't expect more than that, at least not within this cycle, short term. So it doesn't make sense to me to take longs up here. I'm going to look for opportunities to short instead. And again, I'm not trying to time a top. I'm not a doomsday caller, but based on what I discussed earlier in terms of the option mechanics and the market conditions that we're trading in currently, the system favors puts, guys. It favors puts. You're going to be way more profitable catching a move on shorts than you will on calls. I'm telling you that from an intraday perspective and even a higher time frame perspective. Puts are so undervalued right now. You're not going to get this chance again once next year rolls around. I'm telling you. Volatility is going to come back. And once it does, you're not going to get these lucrative opportunities on puts. I'm really emphasizing the fact that you guys need to take advantage and why I've been so focused on taking puts. The entire week throughout this time when we were seeing new all-time highs on SPX, we went 7 for 8 on puts last week. It was insane. 7 for 8 on puts. We didn't take a single call. You know, it goes to show if you understand the mechanics, if you understand what you're seeing on the chart, you can easily counter trade it. Easily. There are opportunities that are going to present itself to you. And when they do, you have to take advantage of that. All right. Another question that Davi had asked is, my question for your video, what strategies do you use to pick long-term stocks? I'm beginning to build a long-term portfolio and it's kind of overwhelming start. If you guys had seen when I started that 100K port on shares only, funny enough, it just so happened to be the August 5th bottom when I started buying. You know how the saying goes, luck is preparation meets opportunity. It just so happened to be that day. Like I had the money deposited in July. I just never started it because it kind of left my mind for a second. And I was like, okay, you know what? My birthday is in August. I'm going to start this in August. Just so happens in August, we get the dump. And I bought almost the entire market. China names. I bought Hood. I bought Snow. I bought all these names that were literally bottomed out. So when you're picking these long-term names, it all starts with the TA. Look, I don't care what anyone says. It all starts with the chart. I will pick my trades based on the chart, and you guys will see there's a very high win rate with everything that we took. I just play the chart. Now, this port that I was growing is not a long-term port per se. It's more focused on growth. So it's a little accelerated, which means I'm not going to hold all these names for 3 years. It's more so I'm going to hold them until I see specific targets and pivots being met, and I'm going to scalp them. Okay. But we've had 5 or 6 now names that are over 100% on shares, no options. Our firm position is sitting at 180% right now. Hood is sitting over 100%. Piton 100%. The China names I had already trimmed a bunch right at the highs. The other thing with long-term picks is you can set bids and wait based on what you see on the chart. It all starts with the chart and your technical analysis. Number 2, the other aspect of it is looking at the fundamentals to see if they match up with the technicals. Okay. And number 3, this is going to sound really cliche or even stupid, but buy what you like. Honestly, buy what you like. If you've owned an iPhone every single year, why not buy Apple shares? If you like to buy Starbucks every single day, just buy Starbucks shares, right? Building a long-term port doesn't always have to be so complicated. You can just buy the companies that you like. Okay? But to help you find those entries on those, look at the chart. You have to look at the chart. But otherwise, from a very simple-minded perspective, just buy companies that you like. And then from there, you can use the chart to help you find entries, targets, exits, things like that. Long-term ports aren't meant to be managed the way that I've been managing that 100K port. They're meant to be managed, during pivotal moments of the market or just checking up on them every quarter or every 6 months. That's probably going to be the best advice that I provide you. I think that's pretty much it. I don't think anyone else had any questions for me. Going back to what I discussed, everything is really simple and straightforward, guys. Notice I didn't once mention indicator. I don't even have the indicators on my chart right now. I did not once mention indicators or any other type of system that anyone uses aside from price action and volume. All I did was draw one simple range based on a candle structure, the daily inside candle. That's it. One simple thing. And I showed you guys all the different components that provided for the Confluence, such as options mechanics, looking at NQ, getting a broad view of the market where I came up with this euphoric message, right? Looking at stocks under the hood. This is all simple things that you can utilize to help back your analysis. Okay. And then from there, you just execute. You plan out your day, you plan out the trades, and then you execute it. And that's it. That's as simple as it can be. So I hope you guys enjoy this video. If you find value in them, I would appreciate if you liked it, subscribe, and for more information about Xenith, you can scan this QR code to my right and find all the other information. Cool. All right, guys. Thank you so much for joining in. I will see you guys on Monday.